You've noticed a pickup in allocations back into China from your clients?
It seems incremental in terms of the sentiment isn't as weak as, let's say, summertime, Northern Hemisphere summertime.
That's a low bar, though.
It's a very low bar. Yeah. So again, it's very, very incremental.
Yeah.
But you just get the sense that people aren't as down and out, maybe because of where valuations are, the ongoing policy support that we are seeing. I mean, it's quite fascinating. When you look at flows into Asia, obviously Japan and India have really shone this year. But the southbound flows are still $40 billion US. So the Chinese mainland investors are still propping up the market, and flows from a foreign perspective into the Asia market still around 10 versus, let's say, about 12 for India. So even though negative sentiment remains, the flows are not as bad as one would expect.
Right.
What would it take for a meaningful recovery at this point?
I think it's patience. I think it's that, once again, resumption of confidence, both from a domestic perspective, so property's key, the consumer's key, the investor in China is key, and then you'll see the foreign investors follow suit. And I think also we need to see a trough in earnings, so we do need to start seeing a pickup in earnings in China.
Any signs of that?
There are some signs. Okay. And, again, given everything and where valuations are trading over, 10, 20 years in terms of at trough levels, we do think earnings will come back. And, a market like Taiwan, on the other hand, it's, you've seen earnings downgrades, yet the PE just has been re-rated and re-rated, given the AI enthusiasm as well as expectations of a bottoming in demand. So I still think that China, from a relative perspective, remains very attractive.
So you're saying it's still, relatively speaking, safe. I mean, if you're looking for any sort of upside of next year, I think China is probably the easiest bet right now. What sort of portfolio are you constructing here within the China space?
Again, it goes back to that margin of safety. It goes back to holding good companies, so really well-financed companies. Because let's say we do see another leg down. You want to have those companies that will still be around. In fact, they'll probably increase their market share if we do see another downturn. So good management teams. And across a number of sectors, I'd still be cautious about those very well-owned, momentum-driven areas. So again, EV, AI. You can look across commodities, consumer discretionary, staples, again, versus EV. You got the auto dealerships. They're all looking pretty attractive in terms of both where they're trading at as well as their upside.
Yeah, expand on that a little bit. That's the first time we've heard parts of that consumption play, like auto dealers, for example, presenting a good opportunity.
We still need auto dealers in China. It's an aspirational purchase, still wanting to buy a BMW or Mercedes. And in fairness, this year, if you wanted to buy one, David, you'd probably wait till the next month because there's so much discounting.
I couldn't go. Yeah.
You wouldn't?
No, can't afford it.
So you've got that aspirational purchase. And when you look at EV penetration above 400,000 RMB, it's about 1% to 2%.
Right.
So it's about the brand that people want in that bracket versus, let's say, the BYD bracket where EVs become very, very popular. So, again, auto dealerships still really key, and you've seen luxury brands picking up now in China. The low-end prices are doing well. It's that mid-tier which is still very murky.
You mentioned about opportunities in commodities, oil and gas. I mean, what's the narrative around that? Because obviously you have a Middle East conflict, you have this questions about the demand picture when it comes to energy. I mean, what sort of exposure should investors have?
So it's quite contrarian, but long-term, positive on oil because of the supply side. It's very, very hard to create new oil in terms of supply, in terms of the new barrels, and it's very expensive. So even if demand plateaus, you have the shortage of supply, and nothing can really replace oil. I mean, it'd be great if we could see in terms of the renewables, wind and solar, but if you look at energy in terms of, the return on investment there, it's actually not as attractive as, let's say, oil or nuclear. So, again, it's that supply side, and some of the Chinese players, some of the Asia-Pacific players are very well positioned in terms of that.
We were talking about small caps in China yesterday hitting a bull market, right?
Yeah, the Beijing Stock Exchange 30. Have you heard of that exchange? First time I heard about it. Well, at least looked at it in detail. It hit it hit 25% from the bottom, and I'm wondering, on small caps.
I mean, what does that tell you right now?
Well, in previous recoveries, it's the small caps names that have really done very well and seen the earnings re-range, whether it's the US looking at the Russells, whether it's China. So because we have seen a lot of the earnings being derated in small caps, some of the cyclical small cap names look very, very interesting. So really doing a lot of focus and analysis in that part of the market.
Interesting.
What do you think about how do the winners this year, I'm expanding it beyond China now, how do the winners this year, India and Japan, what does that look like next year? I mean, do we take from that and go to China, to your point, or how does that evolve?
I think the Japanese story is fascinating because you've seen a change in mindset there, especially from the corporate side. And, you know, the Tokyo Stock Exchange is still encouraging the companies to not just be 1x PB, but do better and rewarding minority shareholders. So I think that market, after being so unloved for decades, is probably going to be a consistent deliverer if they continue to see this sort of good corporate governance and, you know, rewarding minority shareholders. India's trading at around 40 times. It's expensive. I mean, some of the Indian banks are great compounders, like Indonesian banks, but in general, it feels a bit toppy, and there's not a lot of margin of safety there, given we've got the election next year, and it just feels like that momentum trade has sort of reached its peak, and that pair trade that we're so used to could come back into play in terms of India, China.